Hello again, everyone. It's Andy here looking at the markets. I'm currently looking at the dollar index futures, of course. As you can see, a little bit of a quiet session, but we are getting ready for an interest rate announcement out of the ECB. We're just waiting until the markets start to open up here in about 10 minutes. The London trading session about to get underway. You have the European trading session is already underway about 45 minutes ago. What I'm looking at right now is across the board. Of course, as you know, I like to trade the major pairs, which when you pay attention to them, have the possibility of trading 27 different currency pairs, but the major focus is to trade the majors. But anyways, looking at across my dashboard, which we will talk about more as the night goes on, the dollar index futures, which is the top left hand corner, you got your top chart here. The market looks like it tried to get below last week's low. You can see that these are all weekly charts, and again the market went down below last week's low, but we are currently trading last week's low. So we had a bounce there, went down below last week's low, and then bounced. Something to pay attention to here is that looking at the Swiss franc, notice how the Swiss franc was trading on the highs yesterday, but now we've been cut down. It looks like 97.60, about 70 pips here of movement, which is pretty interesting. So the question is whether or not this market is going to continue to move lower. The dollar actually was hit today, or yesterday was smacked lower. So now the question is whether or not we can continue lower, and we'll talk about a little bit more about that here in a moment. Again, Swiss franc basically still in the middle of the trading session, but we are off the highs. Same thing with the Canadian dollar. Yesterday we were talking about we actually took a trade off of the bounce. There was a bounce at the previous week's low here that was good for about 20 pips or something like that. Now the market is trading below last week's low and it's moving lower, so that's kind of interesting, something to pay attention to. The Japanese yen has my attention at this point, because if you can see here, Swiss franc got cut down, Canadian dollar got cut down. Now I'm waiting to see if the Swiss franc can actually, or the Japanese yen here, if it can continue to trade off the highs and then start to move lower, right? So the next question is whether or not this will be the next domino to drop and push lower. On the flip side here, the pound, or the euro, is still inside of last week's trading range. Notice here that we did have a bounce at last week's low, and then from there we've been rallying ever since. So kind of interesting to pay attention to the fact that we're trying to find out if the bulls are going to overcome the bears and take out last week's high as 116. Looks like 116.60. Let's see if we can get above the high there. But look at the pound. The pound was able to get above last week's high. Continues to trade above 130. I continue to remain bullish on the pound here, at least on the short-term basis. Okay, Australian dollar also very nice move to the upside. Okay, so we're off of this week's low, above last week's low, and the market continues to stay on the highs. Same thing with the New Zealand dollar here. The New Zealand dollar is up on the highs as well. So very interesting movement here in the dollar, pushing the dollar lower. Let's take a quick look at the dollar index futures. You can see here over the past, this is yesterday's, you can see here there's 12. This was yesterday's trading range here. The market basically got smacked and then went lower. Remember, we were talking about, if you're remembering, we were looking at the possibility of this triangle break And sure enough, the market was able to actually break to the downside. So let me just take a quick moment to actually draw this. So now the question is whether or not the dollar will continue to push lower here. I think that's going to be the question to be answered over the rest of this, the rest of the week here. All right. So once again, there was a quick opportunity to get short the dollar here, and then we actually notice that there's a bounce here. So now let's pay attention. Now what we have is another trend line here that we can actually associate with the downside here. So what we're looking at is a counter trend line. So you can see right here, the market is creating higher lows and higher highs. Now we're wanting to be on alert for this trading session here right now that we're actually trading, is to see if this market can push below this trend line and then continue to move lower. That will be the focus primarily, in my opinion, of the rest of this trading session, where I want to see if this market can actually get below this rising trend line, and that'll be your next opportunity to get short in the dollar. And you can see here that we're this low at 94.73 is actually coinciding with all of this consolidation here. So as you can see, market breaks down, hits support, now it's bouncing. I don't want it to go back above this trend line here. So this is an absolute no-no to have it go back above this trend line. If it does, then that's going to set up for a move to break out of the other side and then continue to move higher. If it does that, if it goes above this trend line right here, then that's going to have me looking for some more upside in the dollar, and therefore I'll be looking for downside at that point in the euro. Okay, so right now I have my this is what we'll be watching. The other one that I'm watching is the Japanese yen. Remember, let's see if I can bring this in here. Okay, so the Japanese yen, this is the hourly chart. Now the basis is looking at your higher time frame. This is the weekly chart that we're looking at, and we can see that we are at we were at the highs of last week, and given the fact that the other pairs, remember what we were looking at is the Swiss franc and the Canadian dollar, were unable to maintain their highs. You can see here that the Swiss franc came up to the highs of last week and then failed. The Canadian dollar came up close to the highs of last week and then failed. So now the question here is whether or not the Japanese yen is going to do the same. Okay, so I'm watching the Japanese yen here to see if it'll actually fall to the downside, and if it does, then that sets up for a nice 100-pip move, thinking that it can go down to the lows, 110.50 or something like that. And the basis of that is that we're already getting some sort of an indication that the market is having trouble staying up, because we have a trend line that was violated earlier today. Okay, so this right here is the trend line violation. You can see how the market was maintaining a trend line here, and then it actually fell through the trend line, used the back side of the trend line here as resistance right here, and then started to work its way down. Now here where we are is at another inflection point that has my attention. If you actually when the market starts to go down, then the idea is to actually start looking for downtrend lines. So here we are. Originally I had this as my downtrend line, but now it's time to adjust it, considering that the market looks like it's trying to break out here. What I'm doing is just drawing it out like this, in case this market is going to use this level here as resistance at 111.50. If 111.50 turns out to be a significant level of resistance, then this is going to be this is going to be an important high here that is going to evolve, and then the market's going to move lower, and then this is going to be a spike level that we're going to be looking back on as a swing point. Okay, swing point, again, if you're unfamiliar with a swing point, is basically the turning point that you could look at in the market every time you look at a chart here, or should I say whenever you're looking at a chart, you have swing points. If you start here at the low and then work your way up, everything that wherever the market turns, it creates swing points. So start on the low is a swing point of this down move, or what we call the down leg. The down leg completes at this swing point, rallies up to this swing point, and then falls to this swing point here, rallies all the way up to this swing point, down to this one here. These are all swing points. Okay, so as it stands here right now, I believe that we could be in the middle of creating a swing point that may take well, actually it's about 2 minutes to the London session open now, but we'll be paying attention here. If the 111.50 level continues to hold and then the market pushes down, then that would be this will actually be creating a swing point where this will be what we call a swing high, and then the market moves lower. So that has my attention, just waiting to see if this market will actually respect the 111.50 level. Okay, so 111.50 has my attention here in the Japanese yen. Let's take a quick look at the Canadian dollar. You see how the Canadian dollar has been trading on the lows, or right now it's kind of bouncing, but every time that it's bounced, you see the last time that it bounced, it actually bounced sideways and then started to go lower. So right now we're in a bit of a capitulation move in the Canadian. Now the question is whether or not it's going to move lower. So the way you would mark your charts, or the way that you would actually take advantage of this, is every time that it actually moves below support. You see here that a push below support is actually giving you another opportunity to get short. So 130.41 was the last opportunity to get short. Now the next opportunity is going to be when the market actually breaks down below this low right here at 129.74. Okay, so be on alert here, because if you can push down below 129.74, then that's going to open up the door for another move to the downside here in the Canadian dollar. But what you should notice is that the market, when it's in a markdown phase, which is what it is right now, the Canadian dollar is in a markdown phase. where the predominant order flow is to sell the market. You can see here that the high up here at 132.26 was the top. This is a short-term top, of course, okay? Because if you look up here at the monthly chart, where you see that the high at 146.89 or something like that, that's a long-term top. This is just a short-term top, but the market came down, bounced, went sideways, down through the support level here, down, sideways, and then it's doing it again. So it creates a stair-step type of pattern where the market just continues to wipe out everybody who's trying to actually buy the market. So when you see stuff like this, you need to be on alert and aware that this is not the type of environment where you want to be buying the market. You just want to sit back and try to jump in on the short side. So we'll be watching here at 129.74 if we can get down below 129.74 in a reasonable amount of time to see if we can actually push below this level here. Going back to the dashboard, we're still waiting for an interest rate announcement out of the ECB. So for the moment, we're still in limbo. We're still waiting for this decision out of Europe and then out of London. And so because of that, when I look at my watch list, looks like on the lows here, you have the Euro Aussie and the Pound Aussie, which is kind of interesting because the Australian dollar USD is on the highs. Okay, so overall we can say that the Australian dollar is the pair to be watching, the pair that's impacting the rest of these markets. So Aussie yen right now is up at 0.4%. It's up 0.4% today, and then the Euro Aussie is down. It's -2.9, negative almost 0.3%. Here's the Aussie yen. Now the Aussie yen is showing you the exact opposite of what you're looking at over there in the Canadian dollar. The Australian yen here has been in a markup phase. You can see that even though the weekly chart, you can see that the weekly down bar, the last down bar, we had a low, and then this week's low is just higher than last week's low. But we've been in a bullish. We have a bullish candle here, a buy candle. We're watching to see if this market continue to move higher, and you can see on the hourly chart that the Australian yen has been showing strength here. Okay, so you had to start off the low. After the market put in this low, we rallied, broke out, and then we're creating an up stair step higher here. So after this this interesting move up from, it looks like 78.75 was the low here. The market continues to work its way and creating new tiers to the upside. The other thing that we want to focus on is that we're creating this uptrend line that gives you a little bit of confirmation. So this will give you a place to actually look for long opportunities. If the market comes down into this level here at 79.95, that'll be a place to test the long side. Also, you can see this trend line here. If the market comes down into this trend line or to this level right here at 79.70, that's going to give you a buying opportunity. And this is short term at least, but you can see how you're in a completely opposite type of trading environment here in the Aussie yen as compared to what you were looking at in the Canadian dollar. This is pretty crucial to understand when you're looking at charts, to be able to determine what the predominant direction of the order flow is going, and because that helps you actually stay on the right side of the market, helps you stay in line with the institutional order flow. And that's what your job is as a trader, is to stay involved in the same direction as the institutional order flow. So one other thing that I'll throw on here is a moving average. Typically what I like to use is the exponential 50. So you have the 50 period moving average on the on a lot of the time frames is what I'll pay attention to, but you can see that they call it a moving average. Other people who want to get cute and clever with their names will call it a dynamic support and resistance, primarily because it moves with price, and from time to time you'll see that the market will actually use it as support, like it did right here. Okay, so you can see that right here the market actually used the moving average as support. So there are folks out there who wait for these touches, the price to touch the moving average, and then that's where they'll actually initiate new positions. The other thing is that they program their computers to execute orders whenever those levels are hit. So as it stands, we're just sitting tight, waiting for the market to get settled here in London. The London session, like I said, is just not getting underway. About 10 minutes into the session, and it already looks like it's a relatively quiet session for the most part right now. At least I think that the market is just waiting for this interest rate announcement. At the moment, I'm looking at all my various screens to see if anything catches my eye, so that way I can let you know if something is I think that will probably impact the market. Again, the dollar index futures, now the dollar actually did break out of that triangle, but it looks like we are at support, and the question here is whether or not it's going to hold support and start to turn around. At this point, it looks like you're getting a response at this level where the dollar is currently trading. In other words, the level did put a stop to the movement in the dollar, and it's starting to get a bid. And the question is whether or not it's going to continue to move higher. If it does, again, look for more downside in the euro, and then we'll look for upside here in the Swiss franc, the Canadian dollar. Again, when you look at the dashboard, the majors, Okay, so you know that based on what we're looking at in the dollar index, we're paying attention to the dollar, the Swiss, the Canadian yen, the Japanese yen. Those are positively correlated, and then of course the Euro, Pound, Aussie, New Zealand, which are negatively correlated. You can see here on the dollar dashboard. You look at the dollar to gain an insight into what you should be looking at for the rest of the trades. The other thing is that sometimes it happens the other way around, where the dollar kind of looks like it's you know, confusing or not really giving you a clear signal, but the other pairs might be doing that. So again, once we do our analysis on the dollar, then we start to look at the other pairs to see which ones are corresponding or responding to that. And then you know, you can see here that the Swiss, Canadian dollar, Japanese yen are usually the ones that I expect to be going in the same direction, and the opposite is true with the Euro, Pound, Aussie, New Zealand. I expect those to basically go in the opposite direction. So once again, patience is the order of the day. Waiting for this market to actually pick a direction, or should I say, just determine what it wants to do. Japanese yen continues to trade right around 111.50, and it looks like it's breaking out of this trend line. You have a minor trend line here on the Japanese yen. Let's see if we can bring that up here. Okay, so at this point the Japanese yen is breaking out of this trend line, and now the question is whether or not it's going to continue to move higher. You can see that it's above the 50-period moving average. It also used the backside of this trend line as support just now. So you can see how the market broke out and then it's starting to shuffle right around the backside of the trend line, and now it's starting to move up. So want to be on alert here that if this continues to show strength, next target is 111.65. Okay, so this looks like a pretty good long opportunity. I think I would probably wait until you get a push back to test the trend line here. You're all the way down at 111.37 to test the moving average. So good idea is to probably put an alert there on your moving average, because if the market comes down and actually touches it, that'll be a good entry opportunity. Just want to take a quick moment to actually look at the calendar here. It's probably a good idea to actually take your account forexfactory.com. See up here, forexfactory.com/calendar.php. of course, remember what I do is I eliminate all of the mediocre events. I eliminate the unimportant, what I consider to be unimportant events. So you go to your filter here, get rid of the medium and the low and the no impact. Okay, so you get rid of that, but I leave all the rest of this stuff checked. The other thing here is that you want to make sure that the time options are equivalent to yours. Okay, so at this point I can see that this is not the time, this is not my current time. So you click on that and you can see that this is set to Eastern time, so I need to actually change this. You just set it to Mountain time, which is where I'm at. Okay, 270 now, synchronized 217. This is correct. Go back up here to where it says market. And then oh no, not, I wanted a calendar, sorry. So I wanted to, now what's going to happen is that all of these times here are going to be in sync with my time zone. Okay, so you have this important monetary policy stuff, refinancing rate. This is the ECB press conference here. If you were to turn on your financial news right now, you could, this is pretty much all that they're talking about, because this is what's on the docket for today. Okay, so there again, this will tell you the expectations here. But the most important thing is that the reason why this is important is because what we could see is that you know, at this point the market is probably going to be relatively quiet, because they're waiting for this event here. So typically, if you get any trades from here until the timestamp that's listed here according to your time zone, you don't want to be executing new trades 15 minutes before the time here. So in other words, because it is 2:18 a.m. right now in my time, then I'm okay to trade from here all the way to about 4:45 a.m. Okay, so right about 4:45 is when I need to be done with my trades, and then let the market kind of do what it's going to do as it digests the information that comes out based on this stuff right here. Now that could mean that I literally have to sit out for the rest of the day, because you never know what's going to happen. But in the meantime, that allows me to kind of navigate and see if there's any opportunity that I could trade. Back to the Canadian dollar, trying to see if this market will actually, right now we are at we put in a very short-term high at 130.18. Currently trading at 130. I want to see if this market can get below 129.76, which is this low over here. The Japanese yen is the one that's really has my attention, because again the market is breaking out of this minor trend line here, so I'm wondering if this market will actually continue to move higher. Okay, so it's been really kind of pushing up over the last couple hours, but the problem is Again, not very much institutional involvement. I'm going to take a look at the Australian dollar, because the Australian dollar continues to show, you can see here we're showing strength just like the, okay, so stair stepping higher here, low, high, higher low, higher high up here, a higher low still. Okay, so this is a good, this market is showing us that we should be long, or at least we should be looking for any kind of a pullback to get long. So if you're waiting whether or not you should be getting in the market right now, no, I don't get in the market now. What I do is wait for either a test of this moving average, wait for this market to actually come down and hit this moving average, and then I'll actually get long. Or what I want to do is, there are two other options I look for. One is where you test support. So you have support right here. You have this level of 71.64, which is closer. We can see if the market will actually hold that level. The market comes down to 71.64, then holds, and then runs back up. So I can imagine that there's a lot of buy orders right here. The other opportunity is to see if we're going to get a trend line break here. Okay, so a move above this trend line may entice other traders to get long as well. So there are multiple opportunities here to buy the Australian dollar. As you can see, the pattern that we're forming right now . All in all, just sitting here waiting. Gotta be very patient. It looks like nothing's really gonna be happening until the bank rate decision comes out.
Of course, are bad, but what turns crisis in 80 years was the de facto collapse of the wholesale financial market on the 15th of September 10 years ago. And this is, I think, what is unlikely to be repeated for the foreseeable future. So we are more likely to have things like there's a problem in emerging markets, okay, we are growing slower. Eventually, the US economy may have a little more inflation than it should, so maybe we have a US recession in 2021. We are more likely to have sort of varieties of crises, including what they call a recession, rather than this big, almost once a century event that we had with the
All right, well, let's hope so, certainly. Thank you so much for joining us, Holger Schmieding, Chief Economist at Berenberg. Coming up, fleeing Florence, companies in the Carolinas halt operations to let their employees leave the area. We'll look at the industries most at risk next. This is Bloomberg.
30 minutes after the London session opened and the market really hasn't doing anything now. The reason I emphasize the fact that the market is not doing anything is because this is typically when I actually look for activity in the market. I look for what's known as the opening breakout. And usually what happens is that the market will establish a trading range for the first couple of minutes on the London Open, or actually a major financial business center. Once it opens up, it'll start to shuffle around, and then once you establish a trading range right around the opening of the trading session, then you can actually take a breakout of said trading range. But right now the market is really just very quiet, and you know, when you see stuff like this, it makes you want to get away from the desk so that way you don't do anything stupid. So it looks like the low that we're actually creating here over the past day and a half here in the dollar is right up against the low of the September, from September 5th. So currently we're like, looks like you could be establishing a low, or you're testing the low that's already been established to see if there's a lack of selling. If there's a lack of selling, then that's going to send this market higher. It's interesting how you had a push down to the lows here, and then now it looks like you have a double bottom and then a breakout. Okay, so almost to the point where we're starting to create another, well, at least a stair step here in the dollar to the upside. So got to be very careful here with thinking that the dollar is poised to move lower right now. I think ultimately the only thing that's keeping this dollar up is the Japanese yen.
Certainty does, and the prospects for crippling trade and continuing reduction in productivity, we know that labour volatility in the UK has suffered the low trade. It's been twice as bad as the rest of our trading partners, so we're shortfall relative to what we might have expected it to be to top 10 years ago of around 20% compared to 10% in our trading partners. The compression of trade that will result from the European Union will only exacerbate that trade. That means the overall capacity in the economy is somewhat diminished compared to what we might have otherwise anticipated. And that means with a given level of demand, what we want to try and have is higher interest rates than we otherwise have. But in the presence of uncertainty, we've got to move very, very carefully, because we know that consumers, both in terms of mortgage debt and unsecured debt, are holding relatively high levels of debt at the moment. And we're not quite sure, because we've not done this before, what the reaction of them will be to changes in interest rates. So if you wanted to raise interest rates to
several decades to globalize out, as well as firms that are already integrated in the UK economy, the banking sector, the pharmaceutical sector, the manufacturing sector, deciding how they redeploy their resources in a new UK that is outside the European Union. That will continue to be a story that we are going to talk about over the next decade, and that's not going to resolve itself next year by any means at all.
When you talk about the UK economy as well, it always seems to come back to Brexit in some way or another. But there are a lot of things happening around the world, emerging markets, potentially currency crisis happening there. We keep talking about trade wars as well. What about all those other global elements? How are they feeding into your outlook for the UK economy?
One of the things that we started in the 1990s was this move to globalisation, liberalisation, and those forces of globalisation have impacted on economies in quite complex ways that we don't fully understand. And it's often led to problems in individual domestic economies. So one very good example would be in the UK, the opening of trade to China and the Asian section of countries in the European Union has accelerated the decline in manufacturing jobs. That then led to higher levels of unemployment in areas that have manufacturing. And some of those things led to the so-called protest vote that we might think that the referendum vote was all about. And these same effects of globalisation are affecting America, Europe, Northern Europe, and other parts of the world. And if we don't respond to them with domestic policy in an appropriate manner, there's a danger that we'll sort of pander to populism with the trade wars, the protectionism, the inward-looking policies that I think don't help in the long run productivity and income to grow in a sustainable way that we've seen post-war period. So I think it's a time of great danger for the economy.
Thank you so much for joining us, Garcia, Director of the National Institute of Economic and Social Research. And we'll bring you the Bank of England's policy decision at 12 p.m. UK time. Stay with surveillance, plenty coming up, including London Fashion Week kicks off tomorrow. We'll take a look at the potential Brexit backlash on the UK luxury industry, and we talk about the pharma industry with the CEO of Roche. Make sure to tune into that exclusive interview later. This is Bloomberg.
Seems like we're getting strength in the Aussie. Of course, we should be paying attention to the Aussie yen, is what my indications are telling me. So you got a low right here at 80 or 79.95. Okay. Trying to reach up to 79. It looks like 80.18. This market is chopping sideways. Look for support right around 79.96. Right now, this is the strongest pair on my board. The opposite is the Euro Aussie. That's the weakest on the board. Okay, so the one that we should be looking at buying is the Aussie yen. And then the opposite side we should be looking at selling is the Euro Aussie.
This is Bloomberg Surveillance. I'm
One of the trades that you should be looking at here, I want to talk a little bit about the Euro Aussie. Let's go take a look at the big time frames here. This right here is the monthly chart of the Euro Aussie. Okay, as you can see that right now the high at 163.57 that we're creating at this point here is actually close to this double top high over here. The interesting thing is that on one of my other data feeds, this high right here actually doesn't go up to 165.69. It actually goes as high as the current high. So what I want to do is pay attention to this line over here. So now that you see that you have this line here that the market is paying attention to, you can see that the market came up to this line and now we're actually trading below it, because look at the current closing price is at 161.68. Okay, so we're already off of the highs by 200 pips where the market's getting rejected. Now the question is whether or not we're going to actually move lower. So that's the monthly chart. Go down to your weekly chart. And you can see that the market is already getting rejected over the course of this week. We are trading close to the lows of this week. And then when you take a look at the daily chart is showing a swing high up here. This is a swing point, right? You have a high, higher high, lower high with a close below the low of the high bar. This right here in the middle is what we call a high bar. The reason why it's called a high bar is because it is the actual bar that is that contains the high price. So this right here is the high bar, and you can see that we have a close below the high bar. Once this happens, then we have a swing point, and now we actually have a reason to get short. So what you need to do is be on alert here that if you cannot get above this high at 63.42 or 63.50 for that matter, then the market is going to keep going lower. You need to be watching for a move lower. Okay, so that's what you want to do, is mark this on your chart. That this will help you actually remember that what you're looking at, so that when we're trading, first of all, you can go back out to your monthly chart, and you can see that we've labeled this line here. So now, if for some reason, if you go down to the intraday time frames, you can see here that you have a reference point in that you can look down at your lower time frames, and you don't have to worry about actually forgetting that it's there. This is a constant reminder. And the other thing is to pay attention about noticing that you're stair-stepping lower now. So the market is in a current markdown phase on the lower time frames. You see that we're making step down. We're making these progressively lower lows, and then you could even venture out and do a trend line here and illustrate the fact that you're in a trend line. So what you're gonna want to do is just keep an eye. One, every time you come up to test a previous level of support, it should be resistance. Notice that this level of support here, you can see here that right here you had a low. You created a low here, you bounced up, came back down to that level, and then you created another low, right? So the market used that as support, bounced off of it, and then came down, fell through it. Once it fell through this level of support, then the market rallied up to it and started using it as resistance. Market came back down, established a lower level of support right around this previous level here, bounced, and then came back down through it. So these are known as dead cat bounces. Dead cat bounces are incidents where the market comes down to a level and then bounces and then just goes down through it. Bounces, comes down, falls through the level. So this is what we're gonna decide to be expected. That's for sure. All right. You see how it just becomes a little bit more obvious, but the idea is that we've been able to identify a major level on the higher time frames, and that's what you want to do. The process starts with the monthly chart and identifying key levels that you can trade against. You want to identify key levels like support and resistance based on the monthly time frame, and then from there you're going to trade in the direction of the move that's expected based on that level. So the expectation in this point was that the market goes up to that level and then uses it as resistance. Now, the back to what I was trying to say about the difference in data. Okay, so in this situation, you can see that the high over here that's being created over this month is trying to reach up to this high that's been going back to August 1st, right? So even though it shows here that it's not at the high, I can actually bring in my other chart here and then show you the difference in the data that is being populated. So bear with me. This is something to pay attention to that's pretty important. You need to be aware of the fact that wherever you get your data is important. Okay, so you can see here this high on this chart actually does coincide with this high on my chart. And that's pretty much how I've how I found it. It's kind of odd how that happens, but that's just the nature of the beast. Okay, so if this level continues to hold, if this level can continue to provide resistance up here, then that's setting up for a very dramatic move, or a very impressive move at least, to the downside. Okay, so this is going to be my constant reminder that I keep on my chart to make sure that I'm trading in the right direction, like I should be. Another opportunity that I'm looking for here is the Aussie Swiss. If you pay attention to the Australian Swiss franc, what I'm looking at here is the fact that we are at a very important low here, where the market is potentially creating a head and shoulders. So let's see if I can bring this in. Let's see if it shows. Okay, so this is funny again. Notice that on this chart here, the low over here this low going back to January 1st, 2015 is actually lower than the low that we have over here. But the bottom line is I'm thinking that this could be a head and shoulders reversal. So the Aussie Swiss has my attention also, and this is a very this could actually be a very long-term development here, or it could be short depending on it. But I'm thinking this. Remember, this is a monthly chart here, and so this could actually take, this could take a year to get back up here. But we're looking at, right now you're at 69.71. on this area here, and even if it just goes back up to the neckline, you're at 77, and then based on that I need to figure out what my what would be my projection. So what you do is you measure from the bottom of the head to the neckline, and then you take that and you project it off of the breakout point, which is over here. Okay, so you can see that the breakout point would be over here, and we're looking at 89.42 as the target here. So at this point, this is really what has my attention from a long-term perspective. We'll just have to we'll see what happens. Okay, so it looks like the Japanese yen is continuing to show a little bit of strength here. Okay. So at this point, we're just watching to, we're waiting on the interest rate announcement out of the ECB. We're being patient. Got to sit on your hands and just let this market flip and flop. It looks like we're finally getting a little bit of activity in the market, but nothing really too exciting. The only markets that I'm really looking at in terms of doing anything are the Aussie yen on the strength side, on the strong side, and then the Euro Aussie on the short side. Those two markets are the only ones that are even remotely strong or weak. In other words, remember when I'm looking at the markets, I like to focus on markets that are above or below above 1% positive or below 1% negative, and you don't have any of that right now. The best performing market right now is up 0.4%. That's the Aussie yen, and then the weakest is the Euro Aussie. We're down 0.3% there. So at this point, I just want to hang tight and probably wait. I still have a couple hours before we get the interest rate announcements, so I'm just kind of trying to be patient, because I think that once the interest rate announcements come out, then that'll be during the New York trading session. So keep an eye on the Japanese yen, because that's the one that continues to drift higher. I think that's the one that, you know, if you get a pullback down to 111.45, the trading range is so small, but yet you can see here that we have higher lows and higher highs. Even though it's incremental, it's very small. It still counts, and it's pretty much what's happening. Euro Aussie continues to trade on, you know, near the lows. So those are the markets that I've been paying attention to. And with that, I'm going to go ahead and sign off, because this market really is in a very quiet trading environment, and thinking, you know, you're better off just getting something to eat or something like that, just stepping away from the desk, so that way you don't make any bad moves here. So that's pretty much what I'm going to do. Is that a better idea for me is just to step away from the desk and turn off the trading platform until I'm thinking until New York actually opens up. So with that in mind, I want to let everybody know that we'll be here again tomorrow. If you have any questions, reach out. Mail at garciaresearch.net. You can find us online too. If you like what you are hearing, don't hesitate to hit the like button. Also hit the subscribe button if it's helpful. If you want to get more information, don't hesitate to reach out to us. This is Andy signing off. Once again, garciaresearch.net. Have a good afternoon.